Moving on to the threats to ethics next then. Well, there are various threats to ethics. The first one here is advocacy. Advocacy is where you might promote a certain position and compromise objectivity. So, for example, if you had a listed company that was a client, if you promoted shares, if you advised people to buy shares in that company, that would be advocacy, because you are aligning yourself with that client and you are saying that their shares should be purchased. Self-interest is next. Self-interest is that you have another interest which will influence your judgment. So, for example, a profit-related bonus there. So if you've got a bonus related to performance of a client, that could mean that you obviously want that client to do well so that you secure your bonus. Self-interest threats are very common. Profit-related bonuses are very common. The important thing is that there are safeguards in place to stop that judgment being influenced, so that we have certain safeguards so we know people are still acting with objectivity. We then have intimidation. That's where you don't act objectively due to actual or perceived pressure. So, for example, if a client was threatened the accountant and said you must perform work in less detail, so we pay you less, that would be intimidation. Can be particularly an issue when someone is quite junior or new to a role. If your boss tries to tell you to change something in the financial statements. So intimidation, again, is quite a relevant threat. It is something that can exist. And again, companies need safeguards against this. Familiarity next. Familiarity is that you might rely too heavily on work due to a long-standing relationship. So, for example, if the accountant's wife was employed by the client, the accountant might assume that all that work is fine because it's someone that they know, so they're then not objective. So it tends to happen regarding personal relationships or long-standing professional relationships. If you've had a client for a very, very long time and you know the staff really, really well, you mustn't just rely on someone because you know them. And finally, we've got self-review. So a self-review threat is that we don't properly evaluate any previous judgments. So for example, if you prepared financial statements and then audited them, you're reviewing your own work. So it's very hard to be objective. Firstly, you wouldn't want to flag any issues because if you did, it would show the work you did wasn't correct. Secondly, you might simply assume that the work is correct and just not flag any issues with it at all. So that is a real issue that does exist in a lot of firms. What you need to make sure is the person who prepares the financial information is separate to the person who audits it. The ACCA has a framework for making ethical decisions, and it can be applied to a number of different scenarios. So in terms of how we would do this, well, the first thing we say is, what are the relevant facts? What's the issue here in terms of ethics? We then look at what the ethical issues are that are involved. So is it an issue around our objectivity? Is it confidentiality, for example? And which fundamental principles are threatened? So do we have an issue around, is it our objectivity threatened by some intimidation? Which fundamental principle there is being threatened by this? Do we have internal procedures that can mitigate this? So for example, to use a previous example, if you both prepared the financial statements and audited them for a client, an internal procedure could be, we have two teams, one prepares the accounts, the other audits the financial statements, and they don't talk to each other about it. They are separate. That would be a safeguard to mitigate that threat. Then you also consider, what are the alternative courses of action? Sometimes the alternative course of action would be you don't do something, you turn something down, you can't do some work for a client, or you can't take on an extra role. So you consider what the alternative courses of action can be. The key thing overall in terms of ethical decisions is really, can you look at yourself in the mirror after making the decision and applying the necessary safeguards? If you can, then that's absolutely fine. Ethical issues are totally normal. They do exist in organisations. It's making sure that once you've applied the safeguards and you've understood what the issue is, you are happy that you can look at yourself in the mirror and go, we've done everything properly. We don't think there are any threats here to our ethics.